Here are 6 things that if you're an investor, you need to be aware of, because there's a warning recently issued by Nomura, who is a massive Japanese financial institution. They have like $450 billion of assets under management. They're kind of a big deal, okay? And these guys are tracking 6 gray swan events that could absolutely screw markets. Equity markets, global economy, everything. Definitely your crypto bags or meme coins. Oh yeah, they'd be affected by this shit. So you need to be aware of these things. I know recently we've had favorable macro conditions, and I'm not saying that, everything's going to go to shit real soon. Okay, I'm not saying that. But these are 6 events that you as an investor must be aware of. You have to be, because macro matters a lot more than you might want to admit when times are good in the market. Okay, everybody cares about macro as soon as things go bad, but nobody wants to plan for macro chaos. And macro chaos does happen and will happen, and there will be chaos in the future. So you have to plan for that in your portfolio. Now, let's go ahead and get straight into the 6 things that Nomura says we need to watch out for as investors. Number 1, Nvidia crashing. So basically, the idea here is that the big tech companies are gonna slow down, okay? We start seeing more questions on Nvidia accounting and all that kind of stuff start to surface. Maybe growth comes in slower than expected. They have a bad quarter. Okay, Nvidia is basically holding up the US stock market right now. Jokes, but kind of seriously also. It's a beast, and if that beast has a major correction, it's going to drag a lot of stuff down with it, okay? AI is mega bullish. I'm mega bullish on AI. Nvidia obviously is an insanely, wildly good company. Doesn't mean it won't have major drawdowns. Doesn't mean there won't be major FUD events that spark market panic and chaos, okay? Because of its high concentration, if it goes down, there will be a broader pull down in US equities, and as crypto has largely proved, it is not immune to what goes on in the US equity market. In fact, we're very much linked to it, okay? The second thing, the Japanese carry trade unwind 2.0. Now, it happened back in August, and that was a bad event for markets, okay? Very bad event for markets. Crypto crashed big time. The fear is that this comes back. Now, again, these are all labeled as gray swan events, so these are things that we know of. They're not black swan events, okay? Black swan is something that is completely unpredictable. We wake up tomorrow and there's been, an assassination or a new pandemic breaks out or something like this, okay? These are gray swan events, events that we know, but we don't know if they're going to have a negative impact. So carry trade unwind 2.0. So the Japanese yen has been the biggest funding forex for the past 3 decades. The Bank of Japan raising rates ends this. A massive deleveraging episode could be in the making. So a lot of the Japanese carry trade did get unwound back in August, but it doesn't mean that investors didn't start winding it back up. It doesn't mean that it was fully unwound, and there's a lot of things that can still unwind with that. So in case you're not aware what the carry trade was, essentially Japanese investors are able to borrow at ridiculously low rates, and then they've been buying like US bonds and US stocks and stuff like that. And as we see the Bank of Japan raising interest rates, suddenly those numbers get a lot worse for investors, okay? So this is a key thing to keep an eye on. If we start seeing the Bank of Japan raising interest rates, that could cause a new spark of chaos to happen, which could just be a short-term risk-off event or could be the start of something bigger, okay? Now, real quick, before we get into the 4th factor here, I wanted to give a quick shout out to today's sponsor, which is CoinStats. So CoinStats is the portfolio tracker that is a must-have if you're a cryptocurrency investor. It's awesome because this allows you to connect pretty much any exchange or any wallet and keep track of all your transaction history so you can keep track of your portfolio easily. With CoinStats, you get best-in-class profit and loss analysis with deep portfolio analytics. Because of course, it's essential to know your profits during the gosh darn bull run, right? Because just trying to sell for the best profits possible, obviously important, but actually keeping track of how much money you're making, where you're making the money, which coins are making the money, which coins are underperforming, all that kind of stuff is wildly important. And with their Wallet Explorer, this is a bit of alpha, you can actually search 120 different blockchains and see detailed analytics. And on those blockchains, you can follow any wallet that you want to follow, just add it to your watch list. So if you see a big Ethereum whale who got in early to all the big meme coins, you might want to turn on notifications for that wallet because they might tell you the next big meme coin that they're buying before anybody else sees it. And of course, if you don't want to connect everything on CoinStats to your exchange, you can also just enter all your data here manually. It has heaps of cool features like portfolio analytics, historical graphs, all that kind of stuff, which means it does the heavy lifting for you, okay? Recently, I've noticed they even have a lot of AI features they've been implementing, which is extra helpful to your portfolio management. And if you're someone like me who uses multiple wallets, multiple exchanges, which is probably you too, then it's an easy decision for you to use this tool. Additionally, CoinStats has an easy-to-use mobile app with a great user interface so you can check all of your balances just at a quick glance. And CoinStats is giving my viewers a wild 50% discount by using the link down below in the description. So if you want to start taking your portfolio tracking and management to the next level, go check out what CoinStats has to offer to you, and thank you for supporting our sponsors. Number 3, bonds. So the US 10-year bond yield goes over 6%. That's going to break a lot of shit. Huge fiscal deficits mean bond vigilantes demand higher term premiums. Trump 2.0 actually ends up reaccelerating inflation, and the Fed makes the same mistake that it made in the 1970s. Now that, if we start seeing inflation head back up, people often ask me, Lark, everything's perfectly aligned. Aren't we going to have the perfect bull run? Everything's going to be absolutely immaculate, and the vibe's going to be perfect. We're just going to go up forever. Oh, shit can still break, guys. Stuff like this, again, stuff like this can happen. What if inflation starts going back up? Holy crap. Number 4, U.S. growth. The U.S. has been strangely resilient. U.S. GDP growth for Q4 is projected at 3.2%. No recession in sight. But what if growth starts slowing all of a sudden? You know, Elon Musk comes in, Department of Government Efficiency, they fire 75% of the government workforce. A lot of people out of jobs all of a sudden. Government spending down, yes. Consumers, it breaks them, finally. So in this situation with the U.S. growth shock, consumer spending finally cracks. The unemployment rate goes up, okay? Unemployment rate's been good. Consumer spending's been good. I know everyone started freaking out as soon as the employment rate started inching up even a little bit, but it's near historic lows, or has been near historic lows, so it's not actually that crazy. The thing you don't want to see is a massive spike in unemployment, which is exactly what the Department of Government Efficiency is going to do. It's going to unemploy a lot of people. And those people won't necessarily have public jobs, you know, from some private sector jobs from regular companies hiring, because there's been enough economic pain that regular companies are not hiring right now. So in this situation, it could cause a lot of market turmoil. Hasn't happened yet. Again, these are all gray swan events that Nomura is watching that could happen. How high is the probability? How low is the probability? They're all things that are reasonably possible. It could happen. None of them may happen. All of them may happen. Multiple might happen at the same time. One can lead to another, right? Nvidia crashes, and that just starts a whole slew of madness happening, okay? For example. Number 5, geopolitical escalations. Ha ha ha. Yeah, well, gosh, it feels like the world's been on fire recently, hasn't it? A lot of stuff happens geopolitically, right? And there's a lot of things that can still happen from the Ukraine conflict to what's going on in the Middle East. Maybe something starts kicking off in Taiwan. I mean, there's so many things that can screw up so much of the global economy. You know, whether it be the price of oil, or conflict in Iran, for example, that's going to have an effect on the price of oil. A conflict in Taiwan, that's one of the world's most important shipping lanes, plus all the fallout from sanctions on China and all the rest of the stuff. And there's a lot of stuff that can happen in those situations. So we hope that geopolitical tensions ease under a new U.S. administration, not escalate as they have been for the last few years. And number 6, this is probably the biggest one, China stimulus disappoints. So essentially, fiscal policy remains key when it comes to China with consumers weak. What if it disappoints? So China has been announcing just a raft of massive stimulus. They've been lowering interest rates. I think it was Goldman who were saying that they expect record interest rate cuts in China in 2025. China has been literally spending hundreds of billions of dollars trying to shore up local governments and the property markets and the economy and the stock markets. They've been throwing everything at it, including the kitchen sink. So far, it's been okay, but it hasn't seen a complete turnaround in the Chinese economy or Chinese markets, Chinese property markets, stock markets, all this kind of stuff. So let's see. Will the newest raft of stimulus truly be the nail that does, okay, that's it, we've got it, everything's fixed now?